Hello and welcome to the Sand to Pearls Stock Market Commentary. Market week ending Friday, October 18th, 2013. Market breadth. With this past week's market advance, our bull-bear point and figure ratio rose from 1.38 to 1.92, advancing strongly into bullish territory. The total count of securities in bullish or bearish patterns increased 12% to 2,151. The count of bearish stocks decreased 9%, while the count of stocks in bullish patterns increased 27%. The Sand to Pearls P&F Market Breadth Summary chart shows us a market now 7 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on membership, and clicking sign up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 100 points for the 9th rise in 21 weeks. At a positive 297.22 points, it has now risen back above the November 2011 top, the lowest top above plus 100 in the last 35 months. So, the NASI is now below 7 of the 8 tops over plus 100 and above all 6 of the bottoms below minus 100 in the last 35 months. Market Gauge Volume Analysis. In this week's volume analysis, the Russell 2000 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 0 accumulation days and 4 distribution days. Of the other indexes, both the S&P 500 Deposit Receipts and the Diamonds Trust ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Russell 2000 ended in neither accumulation nor distribution mode. Momentum. This week, the CCI 20 daily rose rapidly from within the plus or minus 50 range without a zero-line reject pivot long entry point to well over 200, well outside the plus or minus 50 range for a valid zero-line reject. So we wait for the CCI 20 daily to fall back within the plus or minus 50 range. In Woody's CCI trading system, 6 consecutive bars above or below 0 are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 36 weeks ago, while the daily CCI 20 began a Woody's uptrend 5 weeks ago. The CCI 20 weekly has risen back above plus 100, but remains outside the plus or minus 50 range for a valid zero-line reject entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and only one of the bottom 5 is negative. Bullish, gold and silver remains in the bottom 5. REITs remains in the top 5. Banks and brokers have entered the top 5. Oil services has left the top 5. Internet has left the bottom 5. Bearish, S&P retail remains in the bottom 5. Networkers has entered the bottom 5. Disk drives and computer hardware have left the top 5. Focus this week. In Ireland, the Irish people have begun to organize a legal fight against their oppression by the global banking cabal. This should serve as an excellent example for Americans. In addition to that, here's another video of interest this week. Max Kaiser says, "Time to reset Kaputsky Global Financial System." Just a minute, 35 seconds if you want a little dose of Max Kaiser. We do thank you for joining us for this week's Sand to Pearls Market Commentary and hope that you're having a great weekend. We also wish you a great week coming up and happy trading.